Section 19, Deeds and Title Transfer.
The concept of title. Title is the right to or ownership of land and can also be evidence of that ownership. Constructive notice and actual notice. Constructive notice of a document is assumed when due diligence, such as search of the public records and inspection of the property, would reveal its existence. Actual notice means that an individual has direct knowledge of documents in the public records and facts revealed by an inspection of the property. What is the difference between marketable and insurable title? Marketable means that the chain of ownership to a particular piece of property is clear and free from defects. Insurable title means the title insurance company has agreed in advance to provide insurance against defects ever affecting the ownership or value of a property. Title insurance protects both real estate owners and lenders against loss or damage occurring from liens, encumbrances, or defects in the title or actual ownership of the property. Unlike traditional insurance, which protects against future events, title insurance protects against claims for past occurrences. Title insurance, that's a contract that protects the policyholder from losses from a defect in the title. Licensees are not qualified to give an opinion of title. You must advise parties to contact an attorney or a title company, and licensees first must obtain a current opinion from an attorney before quoting an opinion of title is good. There are two types of title policies. You have an owner's policy and a lender's policy. The owner's policy is issued for the purchase price, protects the new owner and the owner's heirs. It's not transferable to another owner, and there's a one-time premium paid at closing. Lender's policy is issued for the unpaid mortgage amount and protects the lender against title defects. It is transferable or assignable. If the loan gets transferred or assigned, that lender's policy will go with it. It protects the lender up to the outstanding loan balance, and most lenders require it as a condition of making the loan. Again, one-time premium paid at closing.
Title exceptions. An exception is a specific item that is not covered by the policy. Any exception listed on the title commitment carries over to the title insurance policy and limits the coverage provided under the policy. A gap in the chain or other dispute of ownership creates a cloud on the title, which is resolved by a suit to quiet title.
To serve as constructive notice and provide priority over subsequent documents, a written document that affects an estate, right, title, or interest in land must be drafted and executed according to state law and must be recorded in the public records that are maintained by the designated official, such as a recorder of deeds, county clerk, or city clerk in the county or city which the property is located. Title history. A chain of title is a complete successive history, all the way back to the original land grants. An abstract of title is a condensed report found in the public records. It's a title search. They go back 30 years, search the public records, and then what happens is an attorney who has examined the abstract will execute an opinion about whether it's marketable or not. Now, it's not usually guaranteed by the attorney, and that's one reason why we have title insurance. Public records are typically searched by title companies that provide title insurance to prospective purchasers based on what the search reveals. The Torrens system provides a certificate of title issued by a county clerk that requires no further search to validate. Unrecorded documents that may affect title, such as a tax lien, may not be recorded immediately, yet are still given priority by law and require a search of the tax records and other sources.
A property deed is a legal document that transfers property ownership from a seller, grantor, to a buyer, grantee. A deed contains the description of the property, including property lines, and denotes the seller, grantor, and the buyer, grantee.
Voluntary alienation is the transfer of title to real estate by gift or sale during one's life using some form of deed. To create a valid deed, the grantor, person who transfers the title, must be of legal age and legally competent to execute, sign, the deed. A deed executed by a minor is voidable. The grantee must be identifiable with sufficient certainty. Earlier we talked about acceptance and delivery is what conveys legally the title to real property, and that recording is not necessary for it to be legally conveyed, just delivery and acceptance, but there is an importance of recording the deed, and that's to give notice to the world that you now have an ownership interest in that particular piece of real property. Deed of trust. With the deed of trust, a trustor conveys all real estate to the trustee for benefit of the beneficiary. A reconveyance deed is used by the trustee to return title to the trustor, but the trustee deed conveys the property to someone other than the trustor. There may be a deed executed pursuant to a court order. The acknowledgement process of the receipt of closing disclosure is required at least 3 days before the closing date. This gives time to review the terms of the mortgage before closing. If changes are requested to the closing disclosure, a new one must be issued and another 3-day waiting period will begin. The general warranty deed, that's the best one. It contains all the covenants and warranties available. The season clause, that's the promise the grantor owns the property and has a right to convey title, stating it's free against encumbrances and liens and such. Further assurance that the grantor will deliver legal instruments if required. Quiet enjoyment would be peaceful possession undisturbed by claims of title, and warranty forever to defend the grantee's title. Special warranty deed. That's a deed where the grantor states he did nothing to encumber or cloud the title. The grantor does not warrant the title except against acts by the grantor or their representative. So the way I remember this one is I think of it as a special warranty deed. You've got a special promise from the grantor, a special promise that they or their representatives did nothing to encumber or cloud the title. Bargain and sale deed has a granting, addendum, and season clause. There's no future warranty, and it conveys all the title the grantor has, but it does not protect the grantee from clouds or claims on the title. The way I remember this one, I think of it as the yard sale deed. Good luck. And the quitclaim deed. This is the one that resolves problems for clouds on title. It's where the grantor quitclaims to the grantee all the grantor's rights, titles, and interest. It provides the least protection for the grantee. It has no covenants or warranty. It's used to clear clouds on title and also uses the words remiss, release, and quitclaim. A quitclaim deed does not have a covenant of season. Remember, covenant of season is where the owner states they own the property and have the legal right to transfer it. In a quitclaim deed, a person is not transferring their property, they're giving up their rights in the property.
Types of deeds. Now this is a way that you can remember it. It's a memory crutch to help you quickly. Of course, they got more information than this, but to get it in your mind, let's remember that a general warranty deed is the best one. A special warranty deed has that special promise. A bargain and sale deed has no special promise. It's like buying something at a yard sale. And then a quitclaim deed has no season clause, meaning they're not transferring property, they're just giving up interest in the property, their rights in that particular property.
Court-ordered deeds are issued as a result of a legal proceeding, and there's two examples: executor's deed and sheriff's deed. The executor's deeds in case of a deceased person's estate, who's the executor of the will. Sheriff's deed is in case of a sale of a property seized by a local unit of government in the town or the bank.
Deed of gift or dedication. Well, a deed of gift is a deed conveying property without consideration, meaning they didn't pay any money for it. A deed of dedication is formally conveying a parcel of land to a municipality, such as how a developer will dedicate the streets and parks and such to the municipality, so the municipality will take care of the repairs, cleanup, and what have you, rather than the citizens or the homeowners in the subdivision.
The parts of a deed contain consideration. That's the payment. Some form must be stated to record the deed. It's called the granting clause. Words of conveyance must be used. The addendum clause defines the ownership interest taken. Is it fee simple or is it a life estate? By the grantee, an accurate legal description of the property conveyed is essential. Or reservations to full transfer of all rights of ownership must be noted. The signature of the grantors must be acknowledged by a notary public or other official, authorized by the state in which the property is located, and finally, there must be delivery of the deed and acceptance by the grantee.
A will or testament is a legal document that expresses a person's, the testor's, wishes as to how their property, the estate, is being distributed after their death, and as to which person, an executor, is to manage the property until its final distribution. There are two types of wills. There's statutory will and the holographic will. A statutory will is just you're filling in the blanks. It's a pre-printed form. Holographic will is handwritten by the testor. I mean, handwritten. When a person dies without a will, his or her property is distributed in a specific order. Number 1, the spouse. Number 2, the children. Number 3, parents. 4, siblings. And lastly, the distant relatives. The purpose of probate is to appoint, supervise, and determine. They're going to appoint an administrator, supervise the estate's distribution, and determine the will's validity.
Transfer of title by will occurs when someone dies testate. That means they prepared a will before dying. A will takes effect only after death and can be changed by codicil or revoked while the testor is still alive. A devise is a gift of real property by will to the devisee. A bequest or legacy is a gift of personal property. Now, to pass title to property upon death, a will must be filed with the court and probated. Wills cannot supersede state laws protecting inheritance rights of a surviving spouse, for example, dower, courtesy, or benefits granted by the homestead law. Transfer of title under the state statute of descent and distribution occurs when a person dies intestate. That means they did not leave a will. The laws of the state where the real property is located will govern the property distribution. Transfer tax stamps may be required to record a deed.
The property taxes that we pay for is what provides local government with the revenues that they need in Florida in order to operate. They account for a large portion of the revenue needed to provide the law enforcement, fire protection, and other services. Determining just value, the taxation process. Ad valorem means according to value. I told you that taxes are levied for a calendar year. They're paid in arrears, which means they come due January 1st, but not until that's November of the same year do we have to pay them. And we have to the following April to get them paid before they're considered delinquent. And that's the tax schedule. Just value minus objective valuation is your assessed value, which is what is established for tax purposes, what you're going to pay your taxes based on, your assessed value. And then October or before, you'll get what they call a trim notice, and it's an assessment for the next year coming up, and it tells you what you can expect, what they look to pass as the new taxing structure. Tax rates are expressed in mills. A mill is 1/1000th of a dollar or 1/10 of a cent. Now, for each one of those school, city, and county millage rates, they can only go up to 10 mills. Now, the best way to know how to figure out this tax rate millage thing when you're doing your math is you've got to move the decimal over 2 spaces. The easiest thing for me to remember, if it's talking just about the whole numbers, if it's 1 mill, you're adding 2 zeros. If it's 10 mills, it's 1 zero. So 1 whole number, 2 zeros. 2 whole numbers, 1 zero. And of course the decimal goes in front.
Property taxes in Alabama. Alabama's physical tax year runs October 1st through September 30th, and the property taxes are paid in arrears. Taxes become a lien on October 1st. Property owners have until December 31st to pay without being delinquent. Property taxes in Alabama may only be paid in one annual sum. Concerning reassessment, state law requires 25% of each county's property to be reevaluated for tax purposes every year. Reassessments are mailed out in the year of reassessment at the beginning of April. Taxpayers are allowed a homestead tax deduction from the taxable value of their residence. The Internal Revenue Service may require completion and submission of the Form 1099-S statement of income to the seller showing the seller's Social Security number. Form 1099-S is filed by a closing agent or the mortgage lender with real estate professionals or the parties being ultimately liable for the filing. If taxes are delinquent, the property may be sold at a tax sale. A delinquent taxpayer has the equitable right to redeem the property by paying all the overdue taxes and penalty any time before the sale. The delinquent taxpayer has up to 3 years, the statutory right of redemption period in Alabama, to repurchase the property from the tax sale purchaser. Mechanics liens must be filed within 6 months of completion of work.
Under no circumstance should you ever give tax advice. And here's one answer that you need to put in your, quote, elevator speech. You know, it's like you parrot this. A lot of times they'll say, well, now, interest on a home loan is tax deductible, right? Okay. Your first instance to say, yes, it is. But what if they don't itemize? Then it's not. So you tell them, yes, interest is tax deductible to my knowledge, but you have to itemize, so please check with your tax representative because I am not a tax representative.
The closing. Depending upon state law and local custom, closing may take place at a face-to-face meeting of the parties at an escrow company, title company, lender's office, or attorney's office, or the parties may execute documents separately and never meet. Purpose of a closing statement: to disclose the approximate cost needed at closing. It protects the consumer from possible mortgage fraud. What is the clear to close? It's one of the final stages before your loan is funded. Clear to close means that the underwriter has reviewed and approved all necessary documents and you've passed with flying colors. In other words, the lender is ready to show you the money. Escrow holder, or also known as escrow agent, is a disinterested third party authorized to coordinate the closing activities. Let's go over Real Estate Settlement Procedures Act again. It's mostly concerned with the cost associated with closing. It's a consumer protection law. It requires disclosure and amount and types of charges during closing. It attempts to eliminate kickbacks and referral fees and applies to federally related residential loans, which is secured with a mortgage on a 1-family to 4-family residential unit. RESPA does not apply to transactions financed solely by purchase money mortgage taken back by a seller, that's seller financing, installment contracts, also known as contracts for deeds, or a buyer's assumption of a seller's existing loan. A servicing disclosure statement must be given by the lender to the borrower if the lender intends to sell or assign the servicing rights of the borrower's loan. The closing disclosure, the settlement statement, for those of us who have a little age on us, they used to be called the HUD-1. They're not called that anymore. And anytime you hear me refer to good faith estimate, again, they are not called that anymore. They are called loan estimate. So, a closing settlement statement involves the accounting of the amounts paid by or received by the parties. Prorations. Certain charges are prorated, meaning it's divided between the buyer and the seller in one of two ways. You have a 360-day year and a 365-day year. The 360-day year is a banking year or 12 months that can be divided by 30 days each. So it's 12 months of 30 days. Now your 365-day year, 366 days in a leap year, to determine the daily charge. The actual number of days in the proration period is determined and the number of days is multiplied by the daily charge. In most states, the charges are prorated as of the date of closing, with the seller being responsible for the date of closing. Debits and credits. A debit, give, is a charge that must be paid by the buyer or seller at closing. A credit, receive, is an amount entered in favor of the buyer or the seller. In most instances, a debit to one party is a credit to the other party.
What's a closing cost estimator? Well, closing costs are also known as settlement costs. They are the fees you pay when obtaining your loan. Closing costs are typically about 3 to 5% of your loan amount. Now there's all kind of applications and things that you can use to assist you in this detail. And it's free from the internet or from your favorite title company. So don't hesitate. Use them. Hazard insurance, also commonly called homeowners insurance, is a type of property insurance that covers a private residence. It provides FEMA flood maps. Other than traditional sales of property, you have short sales, foreclosures, and what you hear REOs, which means it's bank-owned real estate owned. Short sales occur when the property's market value is less than the amount due on the mortgage. A foreclosure occurs when a borrower defaults on the mortgage loan and the lender moves to recoup costs owed by the forcing the property for sale. Real estate owned occurs when a property doesn't receive an acceptable bid at a foreclosure sale and the bank takes ownership of the property. Brokers' record-keeping requirements is that they must maintain records for 3 years. Now here's the deal though, they don't have to be on a computer. If the broker wants to, they can put them in banker boxes and store them in storage units like we used to do back in the 1900s. But they can also do them on computer, and that is okay too. But they don't have to.